Hey guys, Dane here. Just going to do a quick market watch video. I've had some of you messaging me asking, when I'm going to be putting another video out. How come I haven't been putting video outs, and why I put so many out during the bear market, and now I'm never making them. One, I've just been busy with life, with getting the new house, working on it, working on my business, stuff like that. But for me, making the videos during the bear market is more important than making videos during the bull market, because to me, when you buy is far more important than when you sell. So I'm just gonna make a quick video, show you kind of what I'm looking at here, and we can go from there. Plus, I will never tell you to sell your Bitcoin, but I will always tell you to buy your Bitcoin. And I know a lot of you are dollar cost averaging right now, which is great. My strategy is just to buy at the bottoms, and then once we're not at the bottom anymore, use my money to pay down debt and stuff like that. So just looking at the chart here, I've been following this channel for a while. This channel is still intact. You can see these little lines here that I've made. Let me try to darken them up a bit so you can see them. We've kind of followed this same thing all through the bull market. Make a high, bounce back, make another high, break through, make a high, do a bounce, break through, do a high, make a bounce, break through. Right now it's a little bit different than the rest. This one's kind of angling upwards, where you can see the rest of these have been angling downwards. So let's just take note on that. I'm gonna delete that one. Let me show you a couple of the other things I'm watching, including our moving averages. So let me open them up here. Now I always use the same moving averages all the time. The 143, which on the weekly, that is our 1,000-day moving average. The 200, which on the weekly is our 200-week moving average. The 21-week moving average. And then the 52-week moving average, which is the 1-year moving average. The way I color them, our yellow is our 1,000-day moving average. Our red is our 200-week moving average. I'm going to turn those off right now. Our white is the 21-week moving average, and then the blue is the 52-week moving average. It's always the same for me. We're just going to take a quick look at this 21-week moving average. So where we are right now, we're a little bit underneath it, and to me that's fine. We've seen this, it's been this way all bear market. We've came up, we've consolidated, we've went down below, we've blown up. We've consolidated, went below, we've blown up. We've consolidated, went below, we've blown up. We've consolidated, and now we're currently below. And typically, we've stayed under here for multiple weeks before blowing back up. And it looks like we're just starting to do that again now. We could literally, spend a few weeks under here, consolidating, still be above this line of support here, and then, make another move up. So let's just take note on that with the 21-week moving average. It looks to just be more the same, so there's no huge red flags on that. We haven't broken this line of support here. That's no huge red flags on that. Let's take a look at some of the other moving averages that I watch. The 52, we're still above that, holding a support over and over. So we haven't broke down below that. So once again, no red flags. It looks like we may, we'll break below that before we break below this line by the looks of it right now. So that might be like a little red flag that lets us know, hey, wake up, like watch, we might, the market might really be turning. But for now, nothing, like nothing exciting here. Just the same old boring sit and wait. Let's take a look at our bear markets. So the 1,000-day moving average, which is the yellow, and the 200-week moving average, which is the red, they're far down here. This is where I always look to buy, is when we're below these moving averages. We can see it's always been an amazing time, and it likely will continue that way. And that's for many markets, not just Bitcoin, but I use it for Bitcoin because it works really awesome, and this is the market I like to trade in. Because I always trade on the weekly chart. I don't go down to the daily or hourly or stuff like that. That's just a waste of time, in my opinion. So yeah, the Gaussian channel. I know I've shown this before, but let's just take a look at it again. So the Gaussian channel, we're staying above. What we might want to watch is if we break below, which is kind of following this line too. And if we put the 52-week moving average on, you can see they're all kind of lining up here. You got our line of support that's coming up here, our 52-week moving average, which is literally the top of our Gaussian channel. So as long as we're holding above those, I don't really see any need to get excited that we're going to be going lower and potentially into really good buy opportunities. We can look in the past. When we have broke below and closed below it, that's kind of confirmed, hey, we're probably going lower. You can see here, broke below it, confirmed, the body closed below it. We got the confirmation candle, continued lower and went below the Gaussian channel, went below the Gaussian channel. See if it goes back here. This one, kind of a oddball out. We did close below it. We got the confirmation, and then it blew back up, but then it did eventually break down for us. One thing I noted in the Gaussian channel video that I made, maybe a year and a half, 2 years ago, was we can use the Gaussian channel as a little bit of a warning shot fired, because it always turns red a few weeks before we drop below the 1,000-day moving average and then start accumulating. It did it here as well. It turned red. A couple weeks later, we dropped below the 1,000-day moving average. It was time to accumulate. Same over here. It turned red. Within a couple weeks, it dropped below, and it was time to accumulate. We are not there right now. So for me, there is no buying. I'm literally just sitting. I've scraped off a little bit of profit. Back here around 108, and then over here, and then up here a little bit. Just skimming a little bit off. That way, if we do turn back into a bear market and it drops, well below our 200-week moving average, I've at least taken some off the table, and then I can redeploy. But let me turn this Gaussian channel off, or at least hide it. Here, this off. One thing that I want to look at that's quite concerning. Let me just hide this. On our stochastic RSI, we've got this major bearish divergence here, which is quite worrisome, because just like during our bear market here, when we had this bullish divergence headed up, our price action was going down. Right here, boom, boom, bullish divergence. We knew it was only a matter of time until the market turns, and eventually it did. And then we entered the bull market, just like we're playing musical chairs right now, where it's only a matter of time before the music stops, and this bearish divergence ends up breaking us down and collapsing. One line we can watch on the stochastic RSI on the weekly is right here. This has been the where we came down to multiple times over and over and over again. So there's there's an expectation that we could come back down here, touch this line, maybe touch this line right here, and then maybe momentum will turn back around and we'll come back up here and eventually get an all-time high. So that's something that we got to watch for. It is a possibility in this game. Let's take a look at Stochastic RSI. So we are bottoming out right now. Here was the last time we crossed over here. We crossed over here, and each time we did, every time we crossed over, we ended up leading to new all-time highs. This one, all-time high, crossed over here, all-time high here, crossed over here, all-time high here. If we come back down, cross over, maybe touch off this, or at least stay above it. We could see one last push up for the end of the year, and who knows? We could break this bearish divergence, because no indicator is right 100% of the time. No signal is right 100% of the time, but many of them are accurate to a high percent. So right now, I'm just watching. I'm not really doing anything crazy. I'm not selling heavy. I'm not buying. I'm literally just sitting. I've been sitting on my hands, for quite a while now. Other than scraping a little bit off the top, a little bit of the froth whenever we were getting up there, I really haven't done much since way back here whenever we were buying, whenever I was buying. And as soon as we broke above this 1,000-day moving average, it was time for me to switch off the buying, because I'd bought all down here, and I hope a lot of you were buying down here too, because it doesn't matter then. Say the price comes down to 66,000 American, you're still well in the profit. So, but if you're buying up here and it drops down here, you feel the pain, and I understand that. I did that back in 2018. I was buying the top and then had to wait until this bull market to see some gains. And so that's about it. I think I'm going to stop it now. How long have we been? 12 minutes. Okay, awesome. So yeah, I probably won't make another video for a while unless I see something crazy happen in the market. Other than that, just be patient. Just wait. Set up some of these indicators if you want. Find this moving average. You can set them up the way I have them. I keep my yellow, red, white, blue. These ones are for some other ones. Whatever. But I change them up. Sometimes I use it on the daily and I put 1,000-day moving average. But 143 on the weekly is 1,000 days. 200, 21, 52, yellow, red, white. You just watch them. All right, that's it. Enjoy your day, guys. See ya. Peace.